Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, we're getting some breaking news. I think that's coming there. The Lok Sabha has passed the Finance Bill 2018, and I think they've passed some amendments as well, 21 amendments if I'm not mistaken, and 3 new clauses. I believe we have Ritupurna Boyan who joins us on the phone line to fill us in with all those details. Ritu, over to you.
Well, unprecedented scenes in Lok Sabha. The finance bill, the most important bill of the budget session, had to be passed in the din. What happened was that the demand for grants, which is basically the permission of the parliament that needs to be taken for expenditure, everything got taken up in one go. And after that, the finance bill, which is basically relates to taxes and other issues, that then got passed by the Lok Sabha. There are 21 amendments that I could count, and 3 new clauses that have been inserted. We, as of now, do not have any detail on what these amendments are, and shortly we will be told about the kind of changes that have been made in the finance bill. So that is back to you.
Okay, Ritu, thank you very much for that. Yes, you did indicate that the bill was passed amidst a lot of din, so it would be hard to get a hold of what the amendments were. But 21 new amendments and 3 clauses as the finance bill finally gets passed by the Lok Sabha. But as we had promised, let's get back to the interview that our colleague Lata Venkatesh had with Raghuram Rajan. She'd spoken to the former RBI governor about reorganizing public sector banks, reimagining them, and she began the interview by asking him about bank ownership, whether that's an issue and something we need to attack. Here's a slice of that conversation.
A system with public and private banks can work reasonably. The question is, are the incentive structures in the public bank appropriate? And this is something we need to examine very carefully. What happens in these kinds of situations? How much does the management know? What length of tenure does it have? What incentives does it have to find out what's going wrong and put the appropriate systems in place? And what kind of monitoring does the board do? Is the board composed of engaged professionals who understand risk management and who ask the right questions about risk management and procedures? One of the things we did during my time was we got rid of a whole set of box-ticking requirements we had for the public sector boards and asked them to focus on the 5 or 6 big issues that they needed to keep the bank appropriately managed. Now, we also need to ask questions about who appoints these board members and on what basis, and how the board members are compensated. One of my concerns was that we compensate public sector board members at a much lower rate than the private sector can compensate. So even in the market for board members, the public sector is at a disadvantage. Even if you had a perfectly a perfectly good procedure for appointing them. Of course, the Bank Board Bureau was supposed to appoint them, but that never actually happened. So I think we need to look at all this and see if the governance of the banks by the government is being done in an arm's-length professional way, as was suggested during the various Gyan Sangam, or in fact, we haven't moved away from that still, and more needs to be done. These are important questions to ask.
Well, fair enough. We did have the Bank Board Bureau, but several managing directors were changed without telling them or without telling their own boards. So do you still think that within the current system of overwhelming government domination, we can run these banks better?
No, I think we have to change that system. Under the current system, the boards have no responsibility for appointing the management. Yes. If they have no stick over the management, they don't choose the compensation for the management particularly. If they don't have appropriate sticks over management, what control can they have? And if everything comes from orders from the ministry, as opposed to the board determining things, including the appointments of the board, then essentially you've taken off powers from the board, rendered it fairly toothless, and then you expect it to manage the bank in the bank's best interest. I think we need to think very seriously about public sector bank governance reform. One of the experiments that was tried during my time was to try and bring in private sector people at a lateral level. Of course, you want to be careful about doing too much of it. But one of the problems in doing that, of course, is that private sector people shy away from coming into the public sector banking system, except very few who are motivated by patriotic reasons. You can't rely on that to get a large pool of people into the system. So amongst the things we have to examine, the governance of the public sector banks. Are the boards appropriately appointed and appropriately incentivized and appropriately empowered? The management. Does the management have adequate pay, compensation, etc.? But do they have adequate tenures also? And are they, appropriately qualified for the job that they have? We're putting people in charge of, 5-10 lakh crores at these banks, and we need the best people in the country to do it in a reasonable way. And of course, they have to have the ability to hire good people, to bring good people into their jobs as executive directors, as head of risk management, and so on. The public sector was a great repository of talent. But over the years, because of a variety of issues, including hiring freezes, including constraints on whether they can hire on campuses or not, their ability to recruit talent has been greatly diminished. Now, ultimately, the issue is not of pay. Public sector banks pay much more up to a certain level than private sector banks, typically at lower levels. It's only at the higher levels that they pay less, and that's precisely where you need the best talent. So we need to think about public sector pay also, how to rectify it in a way that does more pay for performance, but also gets good people in there.
As you can see on your screen, sources say unlisted shares being listed post the 31st of March to be allowed for inflation indexing till Jan 31st. To understand this in greater detail and the impact and the implications, we're once again joined by our colleague Rituparna Bhuyan. Ritu?
Well, this is the only, lead that we have got regarding the amendments to the finance bill, where some sources from the finance ministry told us that there has been a little bit of a relaxation that has been given on the LTCG front, wherein, any unlisted shares which get listed post 31st March of 2018, they will get inflation indexing till 31st of January. Till 31st of January, this is the demand that was coming in, and hence the Department of Revenue agreed to make these changes, and we expect that the Finance Ministry will be coming out with more details and clarification on this shortly with that respect.
Okay, thank you very much for that.
Well, we have Anuj with us as well in the studio. Anuj, were telling us an hour or so ago that these bipoles, they're significant. Run us through some further details. I think we've got some further numbers that are coming in as well.
Yeah, they're significant in a sense that this could be the template for 2019. Could be, because with the caveat that two caveats. A, the voting percentage was very low, and normally you assume that if voting percentage is low, that the ruling party, the supporters of the ruling party did not really go and vote. So that's point number one. So should not be translated entirely into general election. And caveat number two is that BSP had very clearly said that this is only for the bypolls, because they don't fight bypolls. So that I think is a caveat. But obviously, it looks like Phulpur is going the SP way, and in Gorakhpur also, Gorakhpur should have been a cakewalk. Gorakhpur is a constituency of the chief minister, right? The sitting chief minister who had been winning for last 6 times. So in that to have a close fight, I think that is something which would have unnerved some people. But again, I want to repeat, there are two caveats here. This is not entirely that, just because you lose 2 bypolls, that means the 2019 template is weakened. But the market would start to think that in 2019, could there be a united opposition? And if that is the case, in that case, would 2019 be in the bag already for the BJP? Perhaps not. And I think that would be a bit of a niggling worry for the market. So, but let's see. For now, Gorakhpur clearly looks like a bit of a shocker from everyone.
So whether the Mahagathbandhan gets back again, will be watched. Is this a rehearsal of kinds?
Importance here is that the BJP on its own got, 280 seats, 282 thereabout last time, out of which 100 came from UP and Bihar, 71 from UP and 31 from
31,
Bihar.
yeah.
So that way, or I mean, ND is, let me put it that way, ND is 330, 100 came from Bihar, because in, you also had Apna Dal and you also had in Bihar the Ramvilas Paswan's party. So that way, these two are the most important states, and these two are states where your belief is that they may not lose much in terms of popularity. The MP, Rajasthan and Chhattisgarh are states where there could be some problem because of triple or double anti-incumbency. But at least in UP and Bihar, the view was that they should repeat the performance. But that could be addressed. But again, I want to just caveat that these are just by polls where the voting percentage was very low. So that way, it should not be read as something really big.
Well, at least Anuj, the JDU and the BJP, that's working. In Bihar, that's doing well, I think, in a couple of.
JDU and BJP is working, but the issue here is this was an RJD strong seat, and RJD has got 42% vote. So the point here, Nigel, is that if JDU is back, Bihar, you would assume that it's still fine. The problem here is UP. That's where you have the CM seat and the deputy CM seat. They should have sailed through. But obviously there's combined opposition and the fact that voting percentage was low. So all of this is impacting.
Okay.
All right. Actually, there is a bit of a recovery taking place in the banking space. So let's pull up the intraday chart of the Bank Nifty. It was down close to about 0.8, 0.9%, now down only about 0.5%. Intraday pullback seen in ICICI Bank or a State Bank of India or a Yes Bank. Yes Bank, of course, has been in the green, but ICICI Bank and State Bank of India have managed to cut some of their losses. So at least a bit of a pullback seen in the banking names.
And we are looking at steady moves continuing for the crude oil prices. Remember, it is the US weekly inventory data today, and the support also seems to be coming in from the China industrial output, which grew 7.2% versus estimate of 6.1%, and that has been supportive. Joining us to talk more about the crude prices and, of course, the kind of fundamentals that we are trading within right now, Vikas Halan, VP Corporate Finance at Moody's, is online with us. Vikas, hi, good to have you. Moody's also has increased their medium-term outlook on the crude oil prices. Why is that? What is that? And what are you estimating in sense of fundamentals going forward?
Hi, thanks for having me. Yes, we have indeed increased the price range that we use for our rating purposes from earlier 40 to 60, and now it's 45 to 65, so a $5 increase in our price range. This is more of a recognition of where the market has been, and also taking into account the reduced downside risk to the oil prices. So previously the lowest price was 40 in our price band. Now it's 45, which is recognizing that there is a lower downside. $40 is now our stress case price.
Okay.
Now we have kept the price band still because we expect the price to remain very volatile. And therefore, we continue to keep the price in the range, and also we expect the price to remain within this range until 2019 at least. Now, this is basically being driven by, as you just mentioned, there are three main factors to look at. One is the U.S. inventories have been coming down following the OPEC production cuts and compliance thereafter, and also Russia joining in since November 2016. We have been seeing these production cuts being complied with, and now the inventories have gone down. The second factor is, of course, on the opposite side, we have seen North American shale oil production has been going up. U.S. is now producing almost or sort of taking away all the cuts that OPEC has been complied with. So effectively adding 1 million barrels. And thirdly, the one that is actually tilting the balance a little bit favorably for oil prices is the strong demand growth that we have been seeing globally.
Yeah, but Vikas, I just also want to put another number in perspective here, because there is an EIA report also which says that the global supplies will exceed 100 million barrels per day in the second quarter of this year, and the demand will be able to match that number only by the third quarter. So there is a quarter lag as per the EIA report there. So would you say that in coming couple of quarters we might see some pressure come back for crude?
Absolutely. That's why we're saying the price will remain volatile. And because you are looking at these three factors primarily, and there are, of course, other factors like Venezuela production not returning, and the event risk that has been associated with oil price forever. So you can expect, because the balance is so thin at the moment, or it's very thinly balanced, we are going to see price being volatile. But at the same time, we think price cannot go very high because we expect the U.S. producers to lock in prices whenever they go high and hedge their production. So therefore, you would see a bit of a lid on the price at around the $60-65 per barrel. It's not going to go much higher than that. At the same time, it's not going to go much lower than that because OPEC production cuts are in place, unless we see a huge demand side shock on the oil price, which we do not expect at the moment.
So it's going to be between 45 to 65. So a bit of a balancing now coming there.
Thanks so much. Thanks so much for that, Manisha and Vikas. By the way, keep your eye on the markets. The mid caps are back into the green, actually just moving between the red and the green line. There is a recovery in the banking space. The Bank Nifty has recovered 150 points from the low point of the day. The PSU Bank Index is now in the green. With that news, we are going to wrap up on this show. Thanks again for watching.